Welcome to your single source for insight, inspiration, and unfiltered conversation in financial services. In each episode, we'll talk to the disruptors driving innovation, unpacking the market trends, strategies, and the stories behind the numbers. Follow and subscribe to stay at the forefront of global finance.
So good morning. Welcome to Apex's series of podcasts. This podcast today is essentially on a recent survey report we've done around tokenizing and gaining altitude, and it's being developed in partnership with Mergermarket, I should say. And I've got with me this morning, I've got Tom Bennett, who's Global Head of FinTech, and Angie Walker, who's Global Head of Commercialisation for Apex Digital. Welcome, and thank you for joining.
Great to be here, Brian.
So guys, before we jump in, just a little bit about what the report was basically designed for. We've, as I mentioned before, partnered with Mergermarket. And what we've done is we've basically examined how asset and fund managers are approaching tokenization in practice. Now, we've surveyed 100 senior managers in fund and manufacturing, asset managers and private markets with a split of about 40-40-20 between the Americas, EMEA and APAC. Now, and those managers themselves are ranging between 500 million and 5 billion. In assets under management. So it's a pretty good collection, a really good scan across the market and a good, I think, sense check on where we sit from a tokenization standpoint across the globe. So on that, and before we dive into the data, Tom, why did we do the research? And what questions are we trying to answer?
Well, I think everyone's talking about tokenization. They have been for a while, but I think we've kind of shifted into a different stage of maturity and adoption within the market. So you're seeing stories almost every single week or news articles of tokenized launch funds or tokenized real world assets and different share classes. So I think what we're trying to answer is, where is that adoption now? What kind of use cases are there that we're seeing and working on? But also, what are some of the challenges still in trying to get that adoption up from early adopters to more mainstream?
Okay, good to know. And regarding the adoption for you, Angie, I mean, half of the respondents have already deployed tokenization. Does that match what you're seeing and the client conversations that you're having?
Yeah, I think it's a pretty true reflection of where we are. If you look at the adoption of tokenization globally, we've just exceeded something in the region of around 25 billion across the RWA sort of community of assets. If you actually just look at US Treasuries alone, they've grown by 500% in less than 2 years. So I think we're seeing, and if you look at the direction of travel coming towards us, I know I talk a lot about the younger generation and what their expectations are around investment in the future, but we're going to see 124 trillion be passed down through the generations over the coming 2 decades. So what that means is the ability to access wealth and to invest in quality assets like private markets is going to increase, but come at a much earlier age. And that itself will drive a demand to have broader access to a broader spectrum of assets, broader access in terms of the window of access, 24/7, always on type access, but also ability to be able to have much more flexibility around the construct and the way that they interoperate with the investments that they make over time. So I think we're seeing a massive trend, but it's coming from a number of different dynamics it's almost like a sort of perfect storm moment that we're seeing coming towards us around existing investors wanting to increase their holdings in private markets, new types of investors coming online through DeFi, direct to wallet type investors that we're seeing. And that's one of the areas that a lot of our asset managers and issuers are very focused on, is how do they tap into those communities of younger investors that invest in a very different way to the way that we do. I'm not suggesting you're old, by the way, but also in terms of the diversity of the assets and the diversity of the reach. There's a huge appetite to increase that, both in terms of the diversity of the assets, but also in terms of lowering that barrier to entry. So yeah, I think we're seeing a whole load of different dynamics all happening at the same time. And we have to be constantly one step ahead of all of that to make sure that we're empowering people to be able to deliver those services to their customers. It's an inflection point. Absolutely. For the industry.
And I think just to add to that, I think what this survey does well, and it kind of pulls it out, is it covers questions around how many people are actually working on tokenisation in their respective businesses. And so if you go back a couple of years, it probably would be a handful of people. They might even be just focused in an innovation team or something like that, or they might just be standalone. Whereas what we're seeing now in this report is that the amount of people working on tokenisation within these organisations is starting to scale up, and it's more than a handful of people in some cases. In most cases, it's actually a sizable amount. And it's now people from all different parts of their business that are getting involved. So I think that is a good kind of measure as well.
And that brings
show
challenges.
adoption.
That brings challenges. So the financial market infrastructures have had digital innovation teams for quite a long time. We've been innovating with them and piloting with them for a long time anyway. But actually, you're right. What's happening now is you're getting a much more widespread set of resources. So most financial institutions, a large number of corporates, particularly within like the S&P 500, will have a digital innovation team. That brings with itself a challenge, which is you're playing in a pool of very small number of people who have the skills and the resources and the subject matter expertise to actually deliver and innovate and execute on those strategies. And one of the reasons why what we're doing in delivering services to customers is going to become increasingly important is because that pool is not going to grow at the same rate that the demand grows. So having the ability to deliver services end-to-end customers is going to become increasingly important. And we probably don't sleep very many hours a day as it is, but that's about to diminish dramatically as that demand for end-to-end service provision increases, which I think it will very quickly.
I mean, just for my own segue, talking to clients, certainly on the buy side, if they haven't got a plan for tokenization, they are building one.
Yes.
The sales teams are coming to them and saying, what are our plans? They look at it as an opportunity to obviously attract new clients. So, I mean, yeah, more and more so, we're seeing teams being developed, but they don't have them. They're building them very, very quickly. Now, what I will say, and not to put you on the spot, Angie, it's actually a stat that you gave, just in terms of that wealth transfer, the age of a digital wallet holder versus the age of a fund investor.
So I think the difference is something like a factor of 2. So the average investor, I believe, is in their early 50s. In the traditional world,
yeah.
And the average wallet holder that's an active investor in the sort of Gen Z, Gen Y world is actually around 27. If you look in DeFi, the average retail investor that's active is around 27. Now, I've got to tell you, I think it's actually a bit younger than that because my son's just come out of university and they are active day trading. A lot of the guys at university are actively day trading, and they day trade across multiple accounts, and they have very, very high expectations around yield. They have very high expectations around the diversity of the assets that they put in their holding and within their wallet, and they are much more what I call sort of like an attention economy based in the way that they make decision making. So 24/7, always on, is vitally important to that growing community of investors that are coming towards us. So it's about half, but it's not so much about the difference in the age, which is very significant. It's much more about their expectation. And it's about control. They want much more control. They want always on accessibility. They invest at very strange times of the day and night, but that's because that's when they make their decisions, right? They're very measured. They've got a lot of access to a lot of very valuable information like analytics. And so the demand and the expectation is completely different. And what we've got to do is make sure that when we service our customers, the issuers and the distributors, we make sure we give them the tools to allow them to meet that obligation as that community comes towards us.
I mean, look, just in terms of, I think you talked, 100 trillion, if not more, and it's going to go to those wallets.
124 city quoting, yeah.
Yeah, exactly. So those that are holding the wallets now, essentially be the ones that are wealth transfer. They know how to invest via digital. And to your point, how they invest is going to be important.
And also...
But I do think sometimes we jump a bit in terms of thinking about the next generation of investor, right? So I absolutely accept that we have this growing pool of 20-somethings that are investing in different types of products, and that we need to innovate in that space. No arguments there, but we have so much untapped kind of current investors and capital, particularly high net worth individuals, high end of retail, and that's the area that are demanding access to private markets products, and we still haven't figured out a way of servicing their needs. Now, I would say, reading into this report again, that desire for a good digital experience is what we really need to be delivering. And from an institutional servicing perspective, we've kind of got away with a lot of things over the years in terms of how we present data, how often we present data. Now you as Angie's saying, you just can't get away from that. It needs to be instantaneous.
Yeah.
Like people need to see where their positions are in real time. And whether we're talking about ultra high net worths or the kind of new age, new kids on the block in terms of investors, all of these things ring true. So that's the transformation we're all having to go through at the moment.
No, I couldn't agree with you more, because I think part of the large problem that we see between public and private is the ability to reconcile and actually view that in one place. And if you bring that, certainly, and you tokenize and bring that on chain, you've got it there, haven't you? So that will drive it as well. Now, look, coming back to the report for a second, just in terms of, the 100 managers that we did the survey with, 42 cite broadening the investor access, and Tom, you just spoke about that, as a primary driver for tokenization, far ahead of improved operational efficiency, which I think is important as well, and cost. Now, is this aligned with the product vision to enable that? And where are we with that today?
So in two parts, and I'd love to hear Angie's perspective on this as well. So when I have conversations with clients, I still hear a lot about the kind of operational efficiency gains of it. Simple, faster, better. That's what we're hoping tokenization delivers. But the conversation's definitely shifted towards broadening that access to investors. And so from a product vision perspective, what we've done with Apex Digital 3 is we're trying to create that kind of set of capabilities that services the new era of investing. And so we've got various categories of products. I'm not going to go into all of them today, but we have what I'd call our tokenization and core infrastructure kind of offerings. We have very product specific offerings. So I'm sure Angie will reference what we're doing in the kind of money market fund space, some of the crypto native funds work that we're doing. And then we have new emerging offerings in the kind of distribution and wealth categories, which are different. So we have our Apex Invest platform, which is essentially a marketplace where we're bringing on currently 40 trillion of allocated capital is what the product manager Nicholas told me yesterday. And we've got over 100 funds on that platform. And what we're trying to do is create that kind of matchmaking ability, and for those fund managers to access new types of investors, which is fantastic. And then we've got our wealth offering, which you know very well, Brian, because you spend some of your day looking at that. And it'd be great to get your perspective on as well on where you see that at. But being able to give fund managers that kind of white labeled capability to put their products into more of the wealth channel, which are demanding these private market products. We're servicing all of these different areas, and a lot of that I've talked about is actually kind of technology, but behind that there's all the servicing that goes into it. And so whilst we're rapidly evolving and developing the technology solutions, we've got to race just as fast to get the servicing up to speed as well. So it's no good having custody and transfer agency solutions from the traditional world in the kind of new on-chain world, and that's where we're racing fast.
Angie, do you want to follow to that?
Yeah, I mean, if I think about where we've gone, look, I've been at Apex a year tomorrow, right? And when I walked in the door, we had something like 31 projects in flight, at various stages, and they weren't all sort of in build phase. Some of them were in design, some of them were in validation. We've got 550. I checked before I left to come here. We've got 557 projects in various stages of flight. So in 1 year, that opportunity has grown by like 2,000% or whatever it is. I hadn't worked out the maths. But the point is, if you just look at our traditional business, there are lots of drivers around increased in private market fund holdings anyway. I mean, we're going away from that sort of 60-40, much more to a 40-40-20. Some people say it may be more than that in terms of private market holdings within traditional investment management. So we've got a massive demand, as you say, just from our existing business. And at the end of the day, it's all about securing capital into the fund, right? Everything we do is all about securing capital into the fund. So if we look at where we've got to, I mean, we have been doing, I know we don't talk about it, but we have been doing crypto fund administration for 13 years. Yeah. And we actually represent about 16% of all crypto fund administration globally. So it's a very, credible statistic, and we've been doing that for a very long time. And we do some very, very impressive funds, like some of the stablecoin, Bitcoin yield funds that we're doing recently for Coinbase Asset Management. So we've got some fantastic high quality funds.
Skybridge as well.
In that space, Skybridge as well, indeed. So crypto fund admin, bread and butter, 13 years. We don't really talk about it, but it's a very, very significant part of our operating model and business. But if I look at where we're going with funds, and I look at the the diversity of the range of funds that we're actually tokenizing, it is phenomenal. It's a phenomenally diverse community. So it's not just funds, it's SPVs as well. As you know, Brian, you're involved in a lot of that. But I mean, we're moving away from traditional things like, real estate, private credit. I mean, these are the two biggest categories anyway. Venture capital, hedge funds, we're doing all of those. But the interesting areas where we're starting to move into sort of what I'd like to class as giga projects, where we get these really massive infrastructural projects, and it spans multiple phases, and through the use of smart contracts and through the use of diverse access, we're then able to make available those funds to investors over each of the phases. And the phases can be very different. Like I think you did one recently, which is a massive, large commercial development project, which had, hotels, conference centres, office complexes, and that spans multiple phases: the build phase, the transfer of ownership phase, the ongoing administration phase. We're doing a lot of that in the energy space, in the oil mining gas space as well. And I think these multi-phased, multi-decade projects are incredibly well suited to the use of smart contracts and use of the ledger. So when I look at where we were in the beginning, people were very keen to get into traditional real estate, and that's gone exponentially. I mean, if you look at probably our tokenized funds, which are now 60% of what we do in Apex Digital today, I would imagine a quite significant number of those are real estate funds and private credit as well. So I think the traditional tokenization of funds and SPVs is growing very quickly. It's very large in number. We're very confident about delivering that service, and it's becoming very established, almost as sort of a table stakes type service delivery. And we've got a diverse client community. And the great news is it's not just people who are Apex customers today. It's bringing us access to a wide range of customers we would have never previously met before, which is fantastic from our point of view in terms of exposure. But then when we step up a gear, so that's almost like the second lane. We're in our super tanker in the second lane, and then we step up a gear into the outside lane and we step into our Formula One racing car. That's treasury, digital treasury services. For Apex, a huge lift. You said it, Tom, right? We had to lift. First of all, we had to do a massive infrastructural upgrade in order to be able to manage that always on sort of digital TA capability. We've done a massive operate model upgrade and opened huge new support centres in Hyderabad and other parts of the world to support this whole 24/7. So it has a different velocity, it has a different cadence, it impacts every part of the workflow, right? So we've had to think about automated onboarding, automated KYC and AML, and scaling the investor community to a level we've never seen in the past. So these things are vitally important because tokenized treasury is going to go exponential. And if you think about stablecoins, and again, we've launched stablecoins as a service, and that's again a fantastic example of where we're delivering an end-to-end service offering. The reason tokenized treasury is so important to us is because it's expected that tokenized treasuries, money market funds and treasury funds will be the biggest single backer to stablecoins outside of fiat. And so as the demand for stable coins goes up, then the demand for tokenized treasury funds goes up. And we were absolutely delighted. I'm going to have to make one punt. We have to be absolutely delighted to have launched PhilQ, right? PhilQ, first ever AAA rated by Moody's liquidity fund, was launched by Fidelity International exactly a month ago. We were absolutely delighted to be part of that team that delivered that solution to the client base, and the investor and capital being secured into that fund is growing very quickly now. So I think there's a very diverse range of things that we're tokenizing. I think we're learning as we go. I think the uplift to the operate model was absolutely vital and has put us into a really unique position. And I think where this will get really interesting is where we see massive adoption of stables and money market funds as part of the sort of maturation of things like the Genius Act and the Clarity Act, and the other super regulators the world over coming under pressure because of that to start to fall in line with their regulatory landscapes. And I always think the one thing I hang on to is distribution is king, right? So everything we do is actually all about distribution, whether that's distribution onto a chain or multiple chains, whether that's distribution to a centralized digital venue or decentralized digital venue to an aggregator. Distribution is king. And I think if you look at some of the new partnerships we're forming in Apex Digital that are very strategic, and I'm going to call out the LSEG partnership, a super strategic relationship. They are the owners of Refinitiv. They've got 400,000, institutional investors sitting out there, and being able to integrate Apex's fund issuance services indirectly into LSEG's distribution, wealth distribution platform globally. These strategic partnerships are incredibly important and will get us to another level of distribution that we've never ever achieved in the past. So I think it's a combination of infrastructure and distribution, which we're working very hard to deploy now, combined with the number of diversification of asset classes, the lowering of the barrier to entry on some of these super high quality funds that even institutional investors, some of them would not have had the opportunity to dip into. So I think we're pushing in every direction. We're pushing at the workflow level, we're pushing at the operate level, we're pushing at the technology level in terms of what we can sustain in terms of the scale. And I think all of these things are vitally important so that we can always stay one step ahead and keep being able to empower the people that we service on a daily basis. It's really important to us.
No, that was great. I mean, look, you're absolutely right. Distribution, the integration, all of that massively important. The partnerships that we're building, not just the London Stock Exchange, we're building out on that. Like all funds that we deal with, look, top 10 fund managers in the world are oversubscribed, but there are thousands of managers, thousands of GPs, and they will all benefit from better distribution, better capital raise. And the more that we can do to support them, the more that Apex can offer, I think only puts us in a stronger position going forward.
But I remember talking about the market, democratization. It's a word that's used less, but let's stick with it for now. But I remember talking about that a few years ago, and people would turn their noses up at the idea that you'd be introducing individuals, from the street into some of these funds, some of these products. And it's interesting to see where we are now. And we're not necessarily saying we've reached that point, but there's definitely much more openness to accessing a wider variety of distribution channels. Now, when we've talked with clients, they don't want to go through like one network. They like to kind of hedge across different networks. And so as we're building out our own distribution network, we don't believe for 1 minute that that's going to be the sole global domination of distribution, but it's so exciting to be involved in this journey and to start to work with these traditional and DeFi exchanges and private banks and wealth channels and help them to connect the product into where the demand sits. And acquiring Tokeny was, a fundamental shift for us, having that technology expertise in-house, which enables us to design from the inside. That's such an important thing. Like a lot of the collaborations you see in the market are through kind of partnerships. Third-party partnerships. And, in my previous role within innovation, I had to do a lot of that. But what you never really had was a strong influence over their roadmap.
Yeah, you got control of the outcome.
Yeah, when you own the business, you can see where the kind of puck's going, and then you can design for it. And so technology isn't a product, it's an enabler. And we're very open in kind of seeing it that way. And I don't think anyone really thinks that the number of assets sitting on blockchain is the end goal. It's really about, have we genuinely expanded access to those products? And that's what is driving us as a kind of mission, really.
No, I think that's really important. Like all of this, right? The technology is enabler. Having the technology in-house, hugely important, controls the destiny. And all of this is really just trying to make it more broadly available. And the mechanisms by which we can do that. And the wealth space, we're seeing that more and more. Obviously, like a lot of funds now, certainly with the launch of some of these semi-liquid and evergreen structures, continually looking to raise capital, they have to move away from an institutional base. They have to start relying on wealth, high net worth investors. And it's about how do you bring them in? What's the easiest way and what's the most efficient way to do that? And the technology is that, from an enablement standpoint. So, that's really, really important, really powerful. And, having control over the destiny is, or the direction, I should say, is actually quite paramount.
Before you move on, just one point on democratization. I agree, some people don't like that word, by the way. I actually think the word means a number of different things.
Correct.
But I think if you take it at an institutional level, so if you just stay with institutional for the moment, democratization is massively important because I think you've both said it, there are a bunch of institutional investors, whether it's ultra high net worth, whether it's wealth managers, whether it's private banks, whether it's family offices, sovereign wealth funds. There's a whole range of these institutional investors that have, to this day, often just not been able to access some of these high quality funds. And I think if we just look inside our own world, around the institutional world, we've now got technology around tokenization. We've got technology even around nominee structures that simulate fractionalization as well, that allow us to give access to those communities. So we're very focused on thinking about how do we get into those communities, how we give our issuers the ability to be able to access those communities in order to broaden that sort of range of investors into the fund. And you're right, the technology is really an enabler, but if we use it in different ways, it's incredibly powerful.
Yeah, I agree. Look, staying with you, Angie. So just coming back to the report, to the survey, 45% of those surveyed, of those 100 managers, have already tokenized private market assets. Now, followed by tokenizing funds, which will essentially include ETFs, money market funds, a little bit more on the liquid side. Walk us through why, and if it reflects on what we are seeing in our commercial engagement with these large asset managers.
So I think I'm going to stay with the more liquid funds. I'm
Absolutely.
going to stay with digital treasury, actually, because I think it's an incredibly compelling area. And we commented on it on a panel last week at Point Zero, and we talked about collateral, repo, instantaneous movement. Okay, so I think the reason a lot of asset managers and a lot of commercial banks, by the way, are incredibly drawn to the more liquid funds, the treasury funds, is because they're sitting on a mountain of treasury that basically, beyond the yield it generates in its dormant form, does nothing more. Now, the great thing about tokenizing a money market fund, and please stop me if you get bored, is that if you have a bunch of high quality liquid assets and you can tokenize them, then you can instantaneously mobilize them as collateral, and they can be collateralized to up to 90 or 100%, depending on what the regulatory regime is in which you operate. So that means that I can, if I'm sitting on a load of money market funds, or I'm sitting on a load of high quality liquid assets, I can tokenize them. I can instantaneously lend them to somebody else. That could be just me lending them to another part of the business within my parent group. That could be me optimizing the collateral within the group itself in order to reduce the level of reserves we have to hold. That could be me lending it to somebody within some collateral sharing agreement through say a central counterparty like an LCH, or it could be us actually posting it into a DeFi lending pool. Now, depending on what your expectation is around yield generation, depending on what your risk appetite is, you can then make a decision. If I've tokenized a liquidity fund or a money market fund, I can then decide I'm going to put 60% of it into stablecoin backing, I'm going to put 20% of it into repo lending, and I'm going to put the remaining 20% of it into DeFi lending. And I will generate a variety of yields, and I can do it instantaneously, and I can pull it back instantaneously. I mean, what is not to like, right? You only got to look at the reserves of commercial banks. They're immense. Look at the reserves of the S&P 500 corporate treasuries. They're immense. So all of these people who've been sat on high quality liquid assets doing nothing other than generating the yield of the underlying instruments for decades, look in the treasury departments of these organizations. There is nothing to stop them. It's absolutely a sort of, it's it's terrible terminology, slam dunk of a use case.
Absolutely.
It's very compelling. And I think, and for those that are risk averse, they'll probably go down the licensed stablecoin route. Because then you're dealing with regulated counterparties typically, and so all you're doing is lending them tokenized money market funds to back their stablecoins. But for those that have got a bit more of a risk appetite, or for their clients who've got a bit more of a risk appetite, then they can start to be more diverse. And you could argue, if you're being very controversial, some people might actually choose to hold tokenized money market funds in their wallet rather than stable coins. So, it depends on what their accessibility is and depends on what their use case is. But, if you want to maximize your yield opportunity, then treasury funds is the way to go. And I think everybody's now cottoned onto this. They've seen some very formidable forces in the industry, like the Fidelities with their AAA rated PhilQ, like, BlackRock with Biddle, like Franklin Templeton with Benji. There's been a number of these money funds that have been tokenized. I think the holy grail now is effectively the fact we're now able to do that 24/7. And when we get to the point where we can settle any obligations on chain, which is not a technical limitation, it's just really a journey, 24/7, then I think it will really open the door to widespread growth. It's a really interesting part of the market.
No, I agree. I mean, look, if you take a hedge fund, for example, when they have to post collateral and post cash, right, so that they can do a long or a short, I should say, synthetic short use. There's just so many use cases, and having a yield on the asset. I think a lot of people are driving for that now. Idle cash it's got no place. Everyone will be looking for yield. And I think coming back to your original point, just about the way that the youth the way they want to lock and control the asset. They want the yield. I think everyone now is saying actually it should be earning more. We want to sweat the asset. It should be returning more. Makes perfect sense.
Yeah, if I talk to my son about buying bonds, he laughs at me.
Yeah.
He says 5%, 4%.
That's exactly right.
Why do I want 4.7% when I can get 12?
That's right.
Yeah, I mean, they're not interested in single digit yields. It just does, it does
Not when
nothing
there's
for them.
double digit
So,
out there,
yeah.
you know, and it comes
And
back.
you can do it safely, right?
That's the key. That's the key. It's the safety of it, right? It's the quality of the actual yielding asset. That's the important one. But yeah, as I say, a lot of the coins out there are offering very good returns. And
Now, stable coins, I think, will still grow exponentially,
Yes.
irrespective of what tokenized money market funds do. Stable coins will grow exponentially. We have worked really hard, and I'm not blowing our own trumpet, but we have worked really hard because we've had to lift that operate model. But the other reason for lifting it, not just for treasury funds, the other reason we had to lift it was for stable coins. And if you think about it, how many people are actually capable of, and I'm probably slightly front running my next question, but you have to think about I think stable coins are probably the hardest of all tokenized instruments to actually service, and I'll come on to that a bit later on. But stable coins, I think, will gain widespread growth if you just cut across the commercial banks. If you look at, you know, the S&P 500 corporate treasurers, instead of this situation they're in today where they have to hold so many different currencies on their balance sheet just in order to operate within the payment, the trading windows of the various jurisdictions, all of that gets eliminated if you hold a stable coin. And the other trend that I'm seeing, which is really interesting, is rather than stable coins being a game of one organization, a growing number of stable coins are becoming consortia backed. I actually think the consortia backed stable coins are increasingly interesting because they genuinely gain utility relatively quickly. And one of the reasons I think some of the work we're doing around the compliance ledger and the T-Rex ledger and this global infrastructure that we're laying down the rails to now is because for stable coin delivery, cross-chain, on-chain and cross-chain, having that compliant ledger on which we can actually deploy stable coins to a diverse audience will be critically important. So I think it's a whole different area and probably is more focused around treasury and cross-border payments and payment service providers. Many of them are now stablecoin enabled, your likes of your MasterCard and your Visa. So laying down those rails for compliant and clean KYC and AML for the delivery and the ongoing administration of stablecoins will be incredibly important. So,
no more locked liquidity on chain.
No, indeed.
So look, just a question for you, Tom. As we move to the demand side, where is demand coming from? According to the report again, 63 say high net worth individuals that we've spoken about before are the greatest buy-side interest, provide the greatest buy-side interest. Now, why high net worths? Why are they particularly interested? And how are Apex Digital 3.0, what are we doing to actually make our onboarding of high net worth investors and their experience? How do we improve that for them? And how do we get the most from that group of investors?
Yeah, I don't think anyone will read this and be surprised by those statistics around the interest level. I think so. I gathered some other stats before coming here. I think there was 1/4 of high net worth individuals have invested in a tokenized product already, and that's up 6% on last year. But I imagine we're going to be up double digits year on year from now on. High net worth capital was just shy of 100 trillion, which is, I think, the same amount that goes into kind of public stock markets in total across the world. Don't quote me on that, but that's what I read. So the actual addressable market's enormous, and they want diversification within their portfolio. They want access. They want to be able to access these products easily, not like it has been in the past. They also want better liquidity, which is what we've heard, tokenization for a long time. The use case has been very much about making those kind of transfers of interests more seamless. And I've seen that firsthand, that you reduce the process of something like that by 90% plus in efficiency. So something like that is very useful. But what sits around all of that is the digital experience that you'll need to service that. And with Apex Digital 3, onboarding and that whole end-to-end experience is, you referenced earlier, you've got investments in 15 different places. How do I keep a track of all these things? Every time I invest in something, I have to provide all my documentation, everything else. If we can move to a space, and we're working on this at the moment and have some very strong proof of concepts around this stuff. But if we can start to kind of pre-encode those permissions into the digital wallets and the identity itself, then those permissions to transact will exist, and you'll be able to invest in other products without having to go through all of these incredibly manual hurdles. And what I would say with Apex Digital 3, we're not saying everyone wants a fully digital experience as well, because I think it's fair to say in the high net worth community, you've got different
varying
maturities, different maturities, and there are many that just don't want to see a portal for the light of day. And so we have other services which enable you to kind of manage the onboarding process in however people want to use it. So I'd say we create the technology where people want it and demand it, but we have alternatives for those that don't want to use it.
Yeah, no, it's very important that you understand each investor's journey and the journey that they want to take. On the high net worth side, of course, I'm assuming that you're including family offices in there as well.
Yeah, absolutely.
Where they tend to most sit. But it's huge just in terms of how big that network is. As I say, it's definitely an area of interest, and which I think most managers are trying to attract.
And actually, interestingly, when we did the original analysis before we started the design of the LSEG Apex Wealth Distribution Platform, we looked across the whole of Europe. We didn't go as far as global, but just we analysed the top sort of 6 markets in Europe. We looked at the top 10 by AUM in those markets, and we looked to see how many of those top 10 by AUM, actually I think it might have been top 100 anyway, we looked at a large community by AUM, and we basically looked to see how many of them do we or LSEG, for example, have a footprint in. And we specifically looked at family offices, high net worth, private banks, wealth managers, pension funds, and the statistics that came back were incredibly rewarding. We ended up with something like, on average across the 5 categories, something like 82% of that footprint across Europe. That's the UK, the whole of Europe, 30 countries, and Switzerland. About 82% across those 5 categories are either existing clients of Apex or existing clients of LSEG. And so that was really important, because we exactly wanted to do what you've just described, is give access to those communities, the high net worth, the family offices, the multifamily offices, give them access to a broad range of funds. But interestingly, we've started that journey with traditional funds. But the next step is to put digital funds in, tokenized funds in there as well. So I think you're right. Not everybody wants everything to be tokenized, but you still can leverage the technology in order to enhance their experience as an end investor. So I think it's a really important part of what we do, is we think about and we make it seamless, irrespective of whether it's a tokenized fund or whether it's a traditional fund. And that's exactly the journey we're going on with LSEG today. Traditional funds day one, which is what we're going live with now, and then within 3 or 4 months of that, we hope to have tokenized funds on the platform alongside traditional funds. So you won't actually be able to tell the difference. It's just the workflow that sits behind that is a slightly different workflow.
And the experience should be the same, regardless
the
of
experience should absolutely be the same. But the point that you make, Tom, is absolutely right. Not all investors want everything to be served at them via a portal. And one of the biggest challenges of our biggest asset managers the world over is they're extremely worried that their investors are going off to all of these other destinations to invest in assets, which basically means that they end up creating a whole load of wallets on different chains where they've bought assets and then are securing those assets through wallets on different chains, and they're worried they'll lose that investor experience. And so what they're looking at is, how do we allow an investor to get access to that broad spectrum of assets that they want to invest in without losing the investor experience? And I think that's really important. We've done a lot. I know you've done a lot of integration work of both the traditional wealth management tools that we've got today and the digital wealth management tools to try and help our asset managers to be able to allow their investors to have a single experience, but that doesn't tie them to a single platform or a single chain. And that's really important.
And I'm a big advocate of like smart digital experiences, not just a digital experience. Like if I go onto a platform, I think about the things I use in my own life. It remembers what I like, remembers who I am. It suggests things that I might be interested in, right? So I can name a whole list of different apps or platforms that we use that you can resonate with. So when we're designing, these platforms to broaden access and you're bringing lots more product on, these platforms traditionally have had quite a curated group of funds on there. So you're kind of looking at maybe 6 or 8 that might be of interest.
Yeah.
What if you're looking at 500?
Yeah, that's the
So our service offering is not just about the digital platform. We also help from like the marketing side. So if you take emerging managers and they want their product to be seen on these platforms, every bit as much as the bigger players that have their own teams to help do this. So we do help our clients of all sizes with this challenge, but we're yet to see how it really plays out. We're trying to use some AI now to which everyone's using, a bit like tokenization in the background, to help develop those better experiences, those smarter experiences, and that's where our Apex Invest platform will ultimately go.
Look, I think it's important, again, with coming back to the investor experience, that they should see funds that are relevant to them. Based on you talk a little bit about the preference that they have just in terms of strategy. So what? And you talk about 500, they should have the option, of course. But when they're really looking, when they're making the selection, it should be actually these are the most relevant funds for you. And that's an important one, right? Rather than them having to distinguish or, unravel themselves the actual right product for them. So a lot of that value will come through Apex Invest, the kind of selection criteria that's available. So just on the processes, Angie, this one's for you. Just internal capability, right? This comes important as well. So when we talk about 7% of the firms, coming back to the survey again, have basically are not entirely confident in their own house technical proficiency. What is the gap, and why is that proving so hard to close?
I think that's a really good point. It quite often gets overlooked because people are so obsessed with the act or the art of tokenisation, they quite forget about how on earth are we ever going to deliver it. So look, I mean, I'm going to go back slightly. I've been in blockchain and DLT for 9 years. I started my life at R3, cap markets a lot longer than that, but I started my blockchain DLT life in R3 9 years ago, and we were just experimenting. We were owned by 42 banks. We had an incubator and accelerator program, and we did nice, very valuable experimentation around trade finance, around insurance, around healthcare, around capital markets and tokenized securities. This was all very important, and at the time, the demand for resources was, relatively modest, but we could sort of keep up with it. The problem you've got is that whether you're a central bank, whether you're a financial market infrastructure like a Euroclear or DTCC, whether you are a commercial bank or a global commercial bank, or whether you're even at the treasury of an S&P 500, the reality is whether to stand up any service offering, whether that's a stablecoin for cross-border settlement, whether that's and I'll come back to stablecoins because I think that is the ultimate bar, whether that's you releasing a digital application, a DApp that provides an end-to-end DVP, delivery versus payment for securitized instrument, or whether you're trading real estate funds and distributing those. There are 3 challenges they have to overcome. The first one is anything you build in the blockchain space has to have the same level of quality that we've been building in traditional capital markets for the last 5 decades. So just because it's blockchain doesn't mean it can't be completely resilient, as in no single point of failure, highly robust, highly scalable, and you should be able to operate it through whatever KPIs and SLAs you need to achieve to meet your client obligations, right? So it's got to have the same rigor that we today deliver in traditional capital markets or commercial banking, regardless. That's the first challenge. Second challenge is when you're deploying and implementing that infrastructure and those and the applications that sit on top of that infrastructure, because it's a bit like a marketplace, really. When you build these applications, you're deploying them into either a layer 2 or you're deploying them into a digital marketplace that's already been launched, like the one DTCC's got. You have to still have the skills to write in the language that is blockchain specific, that will allow you to then build and deploy these applications. That's the second issue, because it's not like you're taking on Java developers, right? There's probably 20 million of those the world over, although you could never find most of them when you wanted them. But the community of actual developers in blockchain is much smaller, although it is growing very quickly. And then the third issue you've got is basically the operating model.
Yeah.
And we know this because we've just been through this process. This is not an 8x5 business. And most of traditional banking cap markets has been used to delivering against a trading window or a payments window or a service window that has traditionally been more of an 8x5 type model. This is an always on 24/7. And if you just look at the underlying core infrastructures to which we have to integrate into in order to deploy these services, they weren't built for always on. So there's three really big areas where you have to overcome the challenge. One is the infrastructure. The second one is the skill sets and the resourcing. I mean, there are more Solidity developers now than there were 2 years ago, 5 years ago, but there's not as many as there are, traditional sort of software developers. And so we have to overcome that, and that's going to take us a little while. And I think the scale of adoption is going to exceed the number of resources. So all of these things are not going to go away, and they're not insignificant. So one of the reasons that we've been painstakingly delivering or building these services so that they are an end-to-end service delivery is because we recognise there's, outside of the really big financial market infrastructures and the really big global tier one commercial investment banks, and maybe a small number of the corporates, maybe the top 50 of the S&P 500, most of the others need to rely on other people like us to deliver those robust and scalable and reliable services as a SaaS, basically. And so for us, what we've been focused on is actually being able to deliver that whole end-to-end solution, but being able to deliver it to the same exacting standards that I was delivering trading platforms 25 years ago to global investment banks. So it's really about that. And so it's no good just saying I've managed to get a piece of open source software that's going to tokenize free of charge, and I've got a couple of sort of skunks works developers who are going to knock up a platform. That is not going to fly, okay? And it certainly isn't going to fly with the compliance officers of this world, who are now very, very
It's not scalable at all, is it?
No. So the fact that we're delivering a range of services, and I think more and more service providers will invest in delivering services, not technology. So although we've invested in and acquired some incredible technology assets, and Tokeny and Tokan are really good examples of that, the reality is the thing that we will deliver that will have the greatest value to the community that we service today will be end-to-end service offerings. Now, the reason I left stablecoins to the end is because I think stablecoins have the highest bar. So if you think about, it's currency, right? It's a near equivalent cash instrument. So it's a digital currency. It's not quite as pure as a tokenized deposit, which is 100% fiat backed, but it is, for all intents and purposes, it's a digital currency. And so when you are minting and you're a licensed stablecoin operator, and you're actually going to make that service available to your customers, whether that's internally within a large organization or whether that's externally to your biggest suppliers or your biggest customers, you have to deliver that in a way that not only is fully reliable, but you've then got to be continually being able to attest and be completely transparent around the fact that the backing assets that back those coins in circulation never diminish below the face value of the actual stable coins that you've minted. So it's not just about the minting, the physical act of minting and distributing, or the digital act of minting and distributing the stable coins. You've then got this ongoing administration task, and quite often a lot of those backing assets sit in different custodians to obviously to spread the risk, and therefore you're constantly having to monitor the valuation of those backing assets on an ongoing basis. And aggregating that up to. So we basically, ironically, we don't talk about it, we've been doing that for over 4 years. Okay. And to the tune of a very, very large dollar value of stable coins in circulation. So what we're now able to do through the acquisition of Tokeny is we've been able to complete the whole sort of end-to-end journey. So we can now manage the minting, the distribution, the ongoing middle office and treasury management of the coins in circulation versus the backing assets lodged in custody with trusted custodians. And then through the integration of CCIP and the Chainlink compliance engine, we're able to control the circulation of the coins. We're able to monitor and control the administration of the use of the coins, and also check to make sure that the value of them is commensurate with the
reconciliation of the actual asset back. Yeah.
So the proof of reserve and also the secure mint function is vitally important. So you imagine somebody starting that journey from scratch. It would be the most enormous lift. And so what we're offering customers who are starting to apply for their stablecoin licensing now is a complete end-to-end service offering. They don't need to lift a single piece of infrastructure. They don't have to cut a single line of code. We can deliver that entire service on their behalf. And not only can we deliver it, we can actually deploy it out to the chains of their consumers for them.
And that comes to your point on the consortium-based stable
For
coins.
consortia,
Yeah.
I think having an external service provider that is then validated against a set of KPIs and an SLA is absolutely the way to go. There's absolutely no point in them individually lifting up pieces of that service offering. It's far better they outsource the delivery of the service to an independent third party. And a lot of the attestation is now being delivered by independent third parties. We saw it with the AAA rating of that Phil Q fund. They deliberately used independent attestation providers in order to give complete transparency to the delivery of that service. And I think you'll see much more of that as well. So my point is, look, there is a limited number of people who sit in that pool that has been growing over the last 9 years. It will be massively surpassed by the demand. And even with decentralized, virtualized education, you can't buy experience. No. And so the problem is you need a bunch of people who come from mainstream banking, capital markets, who understand the industrialization and robustness to then become upskilled into the blockchain world in order to deliver those solutions. And I think that can't happen at the speed we're going to see adoption. So for organisations like Apex and Apex Digital, our role will become really important in delivering a range of services that allow people to expand into digital without having to stand up these massive development teams.
Yeah, we're one of the few that are well positioned to do that.
We are extremely well. I would say we're actually, at the moment, with the 24/7 operate model, we're very uniquely positioned. But I'm not saying it will eliminate the development teams. I think the bigger FMIs, a lot of the FMIs who have to have ultimate control over all of their operations because of they're so highly regulated, the central banks and I think some of the bigger global commercial banks, I think will maintain big teams. But beyond that, there really is no need.
But there's time to market as well.
But,
so
I mean,
what's
interesting in the report, though, is it's saying a lot of players in the market are investing in this. They're finding it expensive. Yeah. They're finding it costly. They're finding it slow, to your point. So what we've had to be mindful of is that we have to kind of be agnostic to where some of our clients want to bring some of those capabilities. So, for example, it might not be Tokeny that they want to use. They want to use another blockchain. So we have to have our solutions kind of built in a kind of modular fashion so we can bring whatever is needed to the table. Now, I would very much emphasize what Angie said and not go down the route of trying to build things where you don't need to build them. You know, I'm a big advocate. Like, I'm having my house renovated at the moment. I am not going to get involved in the things.
You're tokenizing your house.
I'm not. You can buy some of it if you want. I'm not going to get involved in the things that I'm not an expert in. I let them do that so I can focus on the things that I 100%. Do best. And my advice would be very much to a lot of fund managers, focus on bringing that next product to market or whatever it might be, but leave some of this stuff to people that have invested, worked out all of the nuances, have gone through the hardships around, becoming compliant and everything else, and basically collaborate from the beginning and not think too far down that journey where you feel like you need to solution more than you do. Like, come and start that conversation, explore those conversations early, because I can see from these stats as well, most of the people we surveyed are still in proof of concept phase. So their thinking is emerging, but it's not finalized. And I can see almost a bit of reluctance in some of those stats that some people feel like it'll take a couple of years to then move into more of a real project. The advice I would give is talk to people that are doing this stuff today and save yourself the hardship 100%. Of trying to figure out the answers yourself.
I think it ties in nicely to a point Angie made. It's about that value chain, right? Where the services you provide are in the chain, right? Yeah. It's like on the journey. We don't need to do that, but we can provide a service here. Yeah, we can help you here. But I mean, having that experience, I think, is hugely. I mean, and I think you talked about it before. The experience that you bring, you can't buy that.
Can't buy it.
You
it's
just
impossible.
Cannot buy it.
Particularly in areas, if you think of some of the more specialised areas like trade finance. I mean, the use of stablecoins in trade finance is just going to go exponential. I mean, it's just going to explode, basically. And so, trade finance is a really very specific use case, and it's absolutely made for blockchain. It's made for decentralized technology, right? The fact that you have such a diverse range of actors and participants, the fact that you've got to be able to deliver really, really cost-effective, widespread capabilities and connectivity, and so it's really well suited to blockchain. But the reality is you've got to understand trade finance. I mean, you can't just train somebody to build dApps and hope that they'll understand the workflow. So I think understanding the business use case and understanding the workflow is vitally important, and that's where we're working with a number of customers around some of these bigger, larger in scale use cases to try to help facilitate the delivery of things like stable coins as part of those things. But it's not it doesn't matter how many people we train if they don't have the experience, if they don't understand the use cases. It's a very difficult journey.
Coining a
Also
term
seeing-
here.
yeah.
No, there's no shortcut to experience.
Yeah, well, this is it. And going through some of the implementations, and Angie's referenced a couple of them previously, but when you have multiple parties involved, it's difficult.
Very hard.
It's very complex.
Yeah.
Maybe, consider having fewer parties involved from the beginning as a design principle when solutioning. I think we've had to transform the way we think about the business. So we've gone from being a services business to being more of a products-led business. Now we're thinking about ourselves as a solutions business, because we have to think about piecing together all of these different components, whether they're in our house or whether they're partly out of our house as well. So a very different way of thinking about things. And we've had to take, and we still continue to take, a lot of our own staff through that education and that journey, because their business is looking very different than it did 2-3 years ago.
So I think the solutions thing is really important, because if you look at a lot of the projects we're now getting involved in, we're doing projects, for example, we're doing a project at the moment with the central bank where they want to be able to issue securitized notes, if you like, and be able to provide those notes in a digital form on chain to the distributing banks, and they want the distributing banks to be able to distribute those out to the end investors using a portal, and they want to be able to settle using a stable coin. So now we've got multiple wallets holding assets, multiple wallets holding cash. We've got a wide range of actors and participants. We've got the issuers, who are effectively a government body. Effectively, you've got the distributing banks acting as the distribution agents, and then you've got the end investors. So that infrastructure and the delivery of the cash back into the chain in the form of stable coins and tokenized deposits is all part of what I'd call an ecosystem. So I think a lot of the solutions we're now being asked to build are about an ecosystem.
Yeah.
They're not about one use case.
No, that's absolutely right.
And actually where that plays out, and it's very recent, but it's come very quickly, is we've been approached by a number of jurisdictions to see whether or not we can actually deliver for them. And I think we're extremely well equipped to do this, to deliver a digital public market infrastructure. And the way I think about a digital public market infrastructure, and again, I had a little bit of exposure to this in my old R3 days, is where you're not only delivering a single use case, you're delivering a diverse range of, think about a smart city, right? You can't just deliver one use case. You've got to deliver a range of use cases. You've got to provide a base infrastructure that allows us to validate and KYC and AML all of the actors and participants associated with that ecosystem relative to the use cases that they and themselves are going to get involved in. You've got to support a diverse range of requirements from very high volume, high velocity, high number of actors, retail type use cases, all the way through to high value sort of institutional banking use cases where the volumes are low, the number of actors is low, but the impact of any sort of failure is much more catastrophic. And so you have to be able to tune it up and tune down the compliance elements of the infrastructure to meet the obligations of the individual use cases. And then on top of all of that, you've got to be able to provide an environment that can scale. So these digital public market infrastructures, which are starting to emerge, particularly in fledgling countries where you don't have a lot of banking infrastructure, but you do have a lot of mobile phone technology.
That's right.
Per capita, then these are a lot of the core infrastructure that we've built and we've acquired through the likes of Tokenisation and the T-Rex compliance chain will allow us to start to build out these sort of almost like, I won't call it a marketplace because it's not, it's like an ecosystem, and it could represent a smart city, it could represent a country. The point is where you're not dragging a very large legacy of existing banking technology behind you. It's a great opportunity to start from scratch with your KYC and your AML at the base, with your money flowing across the applications at the horizontal level, and then a number of expandable apps coming in on top of that. And that infrastructure is where we're going with some of the work we're doing in the solutions team. And I think it's going to become increasingly important.
That's exciting. Look, conscious of time, we've got one question.
Oh.
We've actually got two, but I'm going to make it one. And it's going to be for both of you. So this is going to be the last question is essentially, and also in this question, answer the question, but also just give your summary on where you see the market tokenization going, where we're leading as a business, and, just a nice summation on your own kind of views on on Apex 3.0. So just on that, just in terms of, and again, this is quite a large percentage of the respondents have said safekeeping and custody requirements are their two top areas requiring regulatory consistency. So whether it's in Luxembourg, whether it's in the Cayman, whether it's in the UK, those two features, those two key pieces are what they consider to be the largest kind of like regulatory requirement. Angie, first up, can you give any advice to issuers who plan to tokenise and how to act while the rules are becoming clearer and clearer around the world?
So that's
and Tom, to you as well.
Yeah, so it's quite a difficult question to answer, but I would say you have to, whether you're tokenising an asset or a fund, or whether you're not tokenising an asset or a fund, and whether your client base is institutional or whether it's retail, you have to deploy your services with the same exacting standards that you've applied to your services previously. And so the same level of trust has to be applicable, the same level of industrialization, the same level of security, the same level of transparency, reporting, audit. You know, we have to build these infrastructures, we have to build these solutions, knowing that we can deliver them to the same quality and standards that we do today. And one of the things that's actually super important to all of that is standardization.
Yes.
And I've got to just give one shout out to the guys in the ER3643 Association. It was originally created by Tokeny. ERC3 as a token standard. ERC3643 was originally originated from Tokeny, but it was then spun off, graduated, let's call it graduated from Tokeny, and it became an independent open source association. It's got over 145 large financial institutions in it, both big asset managers, big global banks, big FMIs such as the DTCC and what have you. So
on that, the only way it will work is if it's open source.
Yes, absolutely. Hold that thought. So the reality is, in order to gain true scale, we need to open source some of the de facto components that we're operating with, like token standards, and we also need to work as a community in order to agree standardization around things like instrument taxonomies. So there's a lot of work going on in the background. You know, people like the Digital Asset Securities Control Principles, like the sort of the Global Blockchain Business Council. There's a bunch of industry associations, not for profit, that are driving standardization. What are we doing about it? Then what we've been doing is we've been working really closely with some of the super regulators. I mean, there's fantastic work that goes on with people like HKMA and MAS and the BIS do an enormous amount of work with some of the projects that they're doing, like Project Agora. So we're working as hard as we can to make sure that at the sort of core technology level, we're able to provide the standards, and we're able to provide the level of oversight and governance and reportability and accountability at a technology level that allows us to deliver those use cases to the same quality and the same level of trust that we do in the traditional world. Right. And I think we have to hold on to that.
Yeah.
That has to be our bar, because it doesn't matter that we're using DeFi originated technology. We work in regulated capital markets and banking, and so we have to deliver our services to the same standards.
Trust and confidence.
So
gained.
Interestingly, I was on a panel last week, and I asked a similar question, and they said trust and accountability were much more important than technology.
I agree.
And they remain
100%.
Always the most important thing.
And Tom,
that's true.
in summary?
Well, I can't add much to
okay.
answer. But in summary, I'm going to go off piste a little bit.
Absolutely.
I think there's three types of people in the world. There's people that make it happen. There's people that watch it happen, and there are people that go, what happened?
Yes.
Right. So I think make sure you're in ideally the first category on the tokenization train. But even if you're a fast follower, keep close, keep pushing forward on that experimentation. Come and talk to us if at the moment you feel like you want to take that to the next level. We have everything ready for that. So, yeah.
And Angie, have you anything just to add?
Yeah, I mean, it's a fantastically exciting time. I actually feel very privileged that having waited for 9 years, I call them dog years in blockchain. Every year is like a dog year. I mean, I've waited for 9 years to get to scale, and I really feel we're at the beginning of that sort of that exponential hockey stick moment. So I think it's an incredibly exciting time. And Tom's right. If you're not quite sure about what you want to do, if you know what asset classes you want to be involved in, but you don't quite know how you're going to get there in terms of the end investor journey, we would be hugely delighted to support you in that journey. We think it's a very exciting time, and we would like to sweat the assets. We've invested in some amazing assets, and we'd like to be able to leverage those to bring those experiences to life. So the door is open 24/7.
Absolutely. Look, well, thank you both, Angie and Tom. That has been incredibly insightful. Thank you for your time. Really appreciate that. So just in conclusion, 3 takeaways. First, tokenisation has moved more from theory to production. I think we're seeing that more and more. And demand is now pulling more the market forward, essentially. I'm going to see more and more resources deployed to tokenisation, which is fantastic. And the real barrier is execution complexity. Yeah, and so we're seeing a little bit, and again, and I think the third one is going to be outsourcing to an experienced provider. Yeah, that third party component, if you want that speed to market, if you really, really want to have that safe journey with good hands, then use a third party provider who've got the experience, can't shortcut experience, and I think that gives you the best chance of success. Now, in closing, I will ask anyone that's looked at the podcast, if you would download, please. The full report will be available. You will see the link in the bottom of the podcast. But thank you so much for spending your time, and thank you, Angie and Tom, again.
Thanks Brian. Thanks everyone for listening.
Thank you for listening to The Single Source, brought to you by Apex Group. If you enjoyed today's conversation, be sure to follow and subscribe.